Good afternoon. We're getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson, and just before the 790 KABC News Blitz with Randy Wang at 5. Right now, it's Mottek On Money, the voice of business news in Los Angeles, live on the air, 790 KABC, streaming live online worldwide at KABC.com, and yes, the on-demand Mottek On Money podcast, KABC.com, Apple, iTunes, YouTube, all your favorite podcast platforms. Stocks ticking higher today ahead of the big event this week for Wall Street, and that'll be NVIDIA earnings. That'll be coming out after the closing bell on Wall Street tomorrow. We'll talk more about that coming up here in just a moment. We did see stocks move higher with the Dow back just below its record high achieved last Friday, up 136 points. We're at 45,418. The S&P 500 up 27, and the Nasdaq gained 95. All the major averages still hovering near all-time highs. The yield on the 10-year note now at 4.27%. Bitcoin's seen a wild ride lately. Right now back to 111,000, just shy of 112,000 here now, rebounding from around 109 we saw in the last 24 hours. Ethereum, as it's known, at 4,588. We'll take a closer look at the crypto names here coming up. Well, tomorrow, NVIDIA will be in focus after the closing bell. The summer rally did show signs of slowing this past week until that speech from Fed Chairman Jerome Powell on Friday seemed to recharge the markets, with the Dow hitting an all-time high on Friday. We did see some gainers today in the blue chip index. Looks like Boeing got a boost today. The aircraft company plans to sell 103 aircraft to Korean Airlines in a deal valued at $36.2 billion. The other big story, President Trump said this week he would fire Federal Reserve Governor Lisa Cook, saying there was sufficient cause to remove her. Treasury Secretary Besson defended the president's actions. The dollar weakened slightly in reaction to that. Benchmark yields rose in early trading before paring gains. I'll discuss that big news with Grover Norquist, the president of Americans for Tax Reform. Also, U.S. taxpayers are now the biggest shareholders in Intel. The Trump administration announcing recently that the government has taken a 10% stake in Intel. That's, of course, based here in California. Had fallen behind rivals NVIDIA and AMD in the AI race. And today, Commerce Secretary Lutnick has opened the door to the federal government taking stakes in American defense contractors. That's something else we can talk about with Grover Norquist coming up live later this hour. We also got new readings on real estate today with the Case-Shiller Home Price Index out, which tracks home prices in Los Angeles as well as other major cities. We'll get the latest on that from Jeff LAZERSON, president of MortgageGrader.com and OC Register columnist. But first, on your money, the markets, the economy, NVIDIA earnings out tomorrow. Joining us live now, the top tech analyst in the world right now, Daniel Ives, Managing Director and Global Head of Technology Research at Wedbush Securities, headquartered right here in Southern California. Daniel Ives, also known as the best-dressed guy on Wall Street, with his own clothing line these days as well. Daniel Ives, thank you very much for taking the call live with us here this afternoon.
Yeah, great to be here, Frank.
All right, we're going to appreciate it very, very much. I know you got a big day coming up tomorrow, but set the stage for us. NVIDIA, the stock, by the way, moved up nearly $2 today, just shy of 182, near its all-time high. Why don't you preview the big news we're expecting tomorrow?
Look, this is, the godfather of AI, Jensen NVIDIA. It's the watershed movement as the best barometer for AI spend. And look, I think it's get the popcorn out, get the mimosas out. It's going to be a bullish day. I think it's going to lead to a further tech rally that we've already seen with this validation moment for AI spending that's not slowing down. And there's one person that everyone listens to. It's Jensen, the godfather of AI.
Jensen Huang, the godfather of AI, the head of NVIDIA, who also appeared at the Milken Institute Global Conference here in Los Angeles and Beverly Hills, to be more precise. And that was just before the rally got going for NVIDIA, which took a hit after that Chinese DeepSeek thing came out earlier this year. Is that even a factor anymore? Is there any competition for NVIDIA?
And look, Frank, me and you have talked about, there's one chip in the world fueling the AI revolution, and it's NVIDIA. And even when it came to DeepSeek, as more has come out about that, add 2 commas to the $6 million that, they really were spending, and they were using NVIDIA chips. I think it speaks to right now For the first time in 30 years, the U.S. is ahead of China when it comes to AI, when it comes to tech. And it's very important in terms of what I believe drives big tech stocks higher.
All right, are we going to get any next big thing kind of announcements tomorrow when we hear from Jensen on the call after the earnings news comes out?
Look, I think two big things tomorrow. One, China obviously reopens with the pay for play with the White House, the 15% that me and you have talked about. I think giving some sort of guidance around China is going to be important. We think that could be 15 to 20 billion more per year now add to NVIDIA. I think that's one. And two, and this is the big one, demand to supply. We think right now demand to supply is 10 to 1 for NVIDIA's chips. It's Jensen giving more granularity around what demand looks like. Remember, not just in the U.S., now Middle East is opened up for AI.
On your live with Daniel Lives at Wedbush, the top tech analyst, and I have to give you credit. You stayed with the Mag 7 and certainly been very bullish on NVIDIA. Where do you see NVIDIA stock go from here?
I think we're talking $5 trillion, Frank. I mean, I think this is, I think 225 to 250 is where I see the stock. And look, as I always say, the haters hate, right? And the bears, when they're in hibernation mode, they can't see AI in the spreadsheets. I think NVIDIA, we are talking about just the tip of a fourth industrial revolution. That's playing out.
On your live with Daniel Lives, it's been a while since we chatted behind live microphones. What's your reaction to Uncle Sam taking a stake now in Intel?
Look, Intel needs all the help they can get, right? And I think it's a start, but it doesn't change the massive challenges that Intel is going to have going forward. That continues to be the big worry. And I ultimately think strategically they're going to have to see a breakup down the road with government as obviously, as now a player in the Intel store. I think this could ultimately maybe accelerate a breakup that happens.
All right, looks like the administration looking to bolster successful American companies. Now defense contractors have been mentioned. Do you see the government going into any of the other tech firms? Anything on your radar screen?
Look, Frank, we can potentially see this happening more and more, but the reality is that, when it comes to Intel, it's not going to move the needle. And even with other companies, governments will take a role, but you're seeing a have and a have-nots playing out in tech. I'd say AMD is a have, Microsoft's a have, Google's a have. Look on the other side, Adobe's a have-not. And it's all being defined by AI. I know a government wants to play a role because Trump administration recognizes this is an AI arms race happening between U.S. and China and doesn't want some of these core U.S. assets like an Intel to fall so far behind. I think that's really the role that they're playing.
On the Air Live with Daniel Lives at Wedbush, the other big story this week, Elon Musk suing Apple and OpenAI over alleged antitrust violations. What do we need to know about that one?
Look, I think it's an AI arms race, right? I mean, they'll put some sort of, definitely legal maneuvering here. I think a lot of it ultimately is noise, but it speaks to, look, OpenAI, NVIDIA, they're well ahead. Musk needs to catch up. You're going to see some of these legal sort of antics. Apple clearly caught in the middle. Frank, we're going to see more and more of this going forward because big tech companies are all going after the trillions of dollars to spend.
We've seen Apple stock rebound recently, suddenly coming to live and moved higher today, up 215 at 229 and change. What do you see ahead for Apple here, and might they acquire some sort of an AI entity? That was discussed after their last earnings call.
It's a matter of when, not if. I think they have to acquire Perplexity. Because look, right now, Apple, it's a back to the future moment, right? I mean, it feels like, they're on the outside looking in relative to every big tech player. And I think acquisition is going to be the only way to do it. September 9th, they'll be launching iPhone 17. I think that moves the needle. I continue to be bullish in the stock. But it comes down to they got to rip the Band-Aid off and do an acquisition. And I think clock struck midnight. They know it. Wall Street knows it. They got to do a deal.
Right, that was the other big story today. Apple's iPhone 17 event, just a couple of weeks away now. Any intelligence about what we can expect there?
Yeah, I think there will be some changes from a hardware perspective. I think the biggest thing here is this really leading into what's ultimately a more AI-enabled device. And you have 300 million that haven't upgraded the phone in the last 4 years. So you are going to get a pretty big upgrade cycle. But I think for this stock to go to 350, $400, it comes down to AI. It's monetizing the biggest install base in the world.
All right, you also follow crypto and the crypto equities. We have seen Bitcoin come off its recent all-time high, which was around 124,000 not too long ago. Dipped down around 109, I believe, in the last 24 hours, and right now it's just shy of 112,000. What do you see happening here with Bitcoin and crypto overall?
Look, I think the path is much higher for Bitcoin, for Ethereum, for ETH, because it's not just a risk-on asset, deregulatory, but I think it comes down to the use cases in terms of crypto that are playing out. You're going to see some of these pullbacks, but as I've said, I think you ultimately look at 250, 300K on Bitcoin. I think Ethereum, we could be looking at 12, 15,000.
On your live with Daniel Ives at Wedbush. And what about strategy? I see that one got a pump today, up more than $8 at $351. What's your buddy Michael Saylor saying?
Yeah, I mean, I think everything Saylor's doing continued to be bullish. And I think also, Frank, it speaks to our point, like it's plays like MicroStrategy, when my friend Tom Lee is doing it with Ethereum and Bitminer. I mean, this is the start of a sort of new age that I think we'll see play out.
Bitmine up 35 cents today to $49.95. What about these recent IPOs that have popped? Bullish, for example, which some days has been living up to its name, but not all days. Is that one getting your attention too?
Yeah, I mean, look, it's really been a frozen tundra for IPOs. Now you start to see more and more deals coming out. Reception's been very positive. I mean, look at names like Circle and others, bullish. And I think, look, this speaks to what I view as very positive signs for the market. And I think, you're going to have some trepidation, some of the Fed stuff, geopolitical, but I think if you look at the tea leaves, it's positive in terms as it all plays out.
All right, here we're speaking live to Daniel Ives at Wedbush. August supposed to not be the greatest month for stocks, but here we saw the Dow hit a record high and the other averages near all-time highs. Zooming out to the big picture, is this summer rally going to continue? What do you see ahead for the overall market?
I think tech stocks are up another 8 to 10% rest of the year. I think it's a bullish market. I'm not going to say have some pullbacks. I'm trying to think Fed's going to cut, probably at least twice going into the rest of the year. And that's a very positive backdrop for stocks, in my opinion.
All right, and what about Tesla, which got a pop today, up more than 5 at 351 and change? What do you see ahead here for Tesla?
It's one of the core AI plays, physical AI. Tesla, NVIDIA, and the stock was oversold. Now everyone's focused. I continue to tell you, one of my biggest bullish calls is Mottek's going to be in a robotaxi in LA sometime in the fall. The point is, robotaxis are going to continue to expand to cities, not just LA, I think another 25 cities, and robotaxi is going to be a key part of the value, especially with autonomous, and that's worth $1 trillion Tesla alone.
I'm thinking Mottek and Daniel Ives in a robo-taxi in Los Angeles at some point.
I like that, with the Dan Ives close at the same time. That would be a very bullish scene.
Yes, that will make news probably. And before I let you off the hook, what about IBM, which also came to life recently?
It's an oldie but goodie, right? Not your grandmother's IBM. I mean, this is one, it's an AI play. The install base continues to play out. We're bullish on it. I like everything Arvind, the CEO, is doing. And Frank, in my opinion, this is just, you're seeing a massive renaissance of growth for tech. We are still in the second inning of a 9-inning game.
And the big question we ask here on this program, any other specific places where you are putting money now and or taking it off the table?
I mean, to me, it's a risk on. You own tech, you own crypto. It's bullish. And I think when you have any sort of these pullbacks, you buy these names, especially the core winners. We've identified them in the IVES AI 30.
Fantastic. And how's the clothing line going?
Clothing line's doing great. I mean, obviously demand's been really strong. I think it's one where people have liked the designs, and it's just the start to what I think is just an exciting sort of venture here. Thanks.
That's fantastic. Well, you brighten up Wall Street in so many ways. I've been hearing some glasses clink, and is that pheasant under glass along with champagne? It sounds like a celebratory dinner there this evening.
It's actually I'm in Sydney, Australia, so it's actually cappuccino getting ready for NVIDIA earnings tomorrow night.
That is absolutely fantastic, Dan. Well, thank you very much for joining us live from wherever you are around the world. We wish you a wonderful time in Australia and look forward to seeing you on television tomorrow. Thank you very much for joining us live here. Mottek On Money, 790 KBC with Daniel Ives from Wedbush, based right here in Southern California. Mottek On Money continues, 790 KABC. Good afternoon. Winning day for the stock market ahead of the big event tomorrow. NVIDIA earnings, it'll be coming out after the closing bell tomorrow. Of course, we'll be ready with coverage on that tomorrow afternoon. The Dow moved up 136 points at 45,418, getting closer to the record high we saw the Dow hit on Friday, a couple hundred points off the all-time high for the Dow, which got to the record party late this year. The NASDAQ and the S&P 500 continue to hover near their recent highs. The S&P 500 up 27 points, 6,466. And the NASDAQ gained 95 points, 21,544. The yield in the 10-year note now 4.27%. That's the one that impacts the fixed-rate mortgage rates, and we'll be taking a closer look at mortgage rates and the latest readings on real estate coming up in the next half hour with Jeff Lazerson, the president of MortgageGrader.com, who also happens to be Orange County Register real estate columnist. We did get the new Case-Shiller home price index readings. That includes Los Angeles as well as San Diego and San Francisco and other major U.S. cities. So we'll take a closer look at how home prices are looking these days. Taking a look at crypto now, we see a Bitcoin hovering just shy of 112,000, up about 700 at 111,868. Ethereum, ETH, as we call it, up $1 at 4,588. Doge at the moment at 22 cents. NVIDIA, ahead of the earnings news tomorrow, moving higher today, up nearly $2 at 181.77, near its all-time high. Tesla got another pop today at more than 5 at 351 and change. Apple up 215 at 229.31. Strategy shares up more than 8 at 351.36. Bitmine up 35 cents at 49.95. And Intel, which continues to make news after Uncle Sam took a stake in Intel in the last week or so, pulling back 20 cents today at 24.35. We'll talk more about that big story and what's happening in Washington with Grover Norquist, the president of Americans for Tax Reform. Remains to be seen what this Intel stake will mean for taxpayers. We'll talk about it, and we'll talk about it with none other than Grover Norquist, who will be joining us live here in just a few minutes. Price of gold getting a pop today, up nearly $7 at $3,439.80 an ounce here at the moment. And silver moving higher, up 7 cents at $39.19 an ounce. And now the latest news for you here on 790 KBC.
I'm Paula Pan. I help people make the smartest money decisions possible because let's face it, money's too important to wing it.
What you'll hear is a couple money geeks sitting and talking about this stuff that we're so passionate about.
You name it, anything that's on your mind, retirement, debt, student loans, saving for college.
It's a personal finance journey. It is a wide-ranging squirrel conversation about the topic of personal finance and good financial planning. Super fun.
Afford anything. Follow and listen on your favorite platform.
Welcome to NFL Flag.
Are you ready? Yeah! Are you ready? Yeah!
No matter who you are, lace up your cleats, smear on your eye black, step out on the field and chase something. Chase a goal.
Let's get it!
Chase the big time.
Get that, ladies!
Chase rings. Chase gold medals. Chase all of it. It's all up for grabs now. NFL Flag. Chase something. Visit NFLflag.com to find a league and start the chase today.
Mottek On Money continues here on 790 KABC. American taxpayers now the biggest shareholders in Intel after Uncle Sam took a stake in the tech giant. Intel's share price had been moving lower until recently. The Trump administration announcing Friday the government had taken a 10% stake in Intel, which happens to be based here in California. Intel had fallen behind rivals NVIDIA and AMD in the AI race, which will be back in focus tomorrow when we get NVIDIA's earnings report. Following that story very closely, as well as everything else happening in Washington, a lot of news today. Joining us live is Grover Norquist, the president of Americans for Tax Reform. Grover, thank you very much for taking the call here this afternoon.
Oh, absolutely. Good to be with you.
Wonderful to have you with us. What's your reaction to this remarkable story here? Trump administration taking a 10% stake in Intel and looking to do other deals like this.
I'm not sure what their thought pattern is on it. It's, I don't know, is it supposed to be better than just giving them the money, as Biden wants to do? Does it lead to the temptation? Now, who gets the government contracts? The people the government has a piece of, or the people it doesn't? We really need to take a look at this going down. I am very excited about the general deregulatory movement and our ability to compete. I think we compete best by not involving ourselves. China has had problems. China expanded itself as it taxes, as it acted like it was a dictatorship with, on economic terms, kind of Republican conservative values. I mean, they allowed more private property. They had much lower taxes, and all of a sudden, lots of investment moved all over. And then the new guy came in and started deciding where the money was going to be invested, because he was doing it for political reasons. He didn't want to ever lose power. He didn't want the army to be mad at him. And capital flowed not to highest and best use to make the people of China rich. It flowed to places that guys with guns who were his friends wanted it to. In the United States, when we get the internet, why do we own the internet? Why does every internet company that's worth billions and billions of dollars, why are they in the United States, not somewhere else? We passed a law, 230, that says you couldn't sue somebody. If you had an open area and people could comment and talk to each other, you couldn't be sued for what somebody said on your platform. Can you imagine how it would have slowed down Facebook or anything else if some jerk said something that was libelous on Facebook and all of a sudden Facebook was responsible for it and could get sued for it, or they take it down and then they could get sued for censoring. They let them work it out. They came up with their own rules. They made mistakes. They got things better. And we just went miles ahead of everybody else. And with AI, there's been a movement. I thought we were going to get the legislation in this last bill, but one that simply says the federal government has some few modest guidelines, but no state or city or town can regulate this. And one of the best things we did for the internet was to say that you couldn't tax people for internet access. States wanted to do that. Cities wanted to do that. That would have kept a lot of people away and out of internet access. So I really think our best approach to each of these things is to do what America does best. The government sets a few general rules, and then it steps back and lets American entrepreneurship build faster, seriously, way ahead of the rest of the world.
On the air live with Grover Norquist, President of Americans for Tax Reform. President Trump, I think, trying to take the crown from you as a taxpayer advocate, wants to do good for taxpayers. So right now, Mr. and Mrs. Southern California, all taxpayers, the number one shareholder in Intel here at the moment, with that 10% stake being taken here in California-based Intel, and this, as I understand it, the idea is to support successful companies. Usually, the government comes in when companies are in trouble, like the automakers years ago and banks and so forth. What do you think of that?
Well, we'll see how it goes. We'll see how much they need to do it. Obviously, successful firms can get a lot of capital on the open market and don't need government help. Traditionally, the people who need government help are the ones that are falling behind and not getting things done the way they want to. The lobby, you want to look at the lobbies in Washington, D.C.? Those are the failing companies. Those are the yesterday's industries. Those are the labor unions that wouldn't exist if the government didn't give them power over workers. The bigger the building in D.C., the worse the argument for whatever they're lobbying for. That's why they need the government to come in and do things for them. So I hope that Intel, does well and is successful, can pay the money back, and I just think that Trump's amazing effort to he took the corporate rate from 35, highest in the world, worse than everybody else in the world, down to 21, which makes us pretty competitive. He really wants to get to 15. I hope we do that in the next year. That would make us very competitive with everybody else. China's at 25. We're at 21 with an average of 4 at the state level. So we're kind of where China is. I'm not sure taxing our companies at the same rate that a communist government does is really where we want to be at the end of the day.
Yep.
But what Trump and the Republicans did was very powerful. We need to do more of that. He didn't direct where the capital was going. He said, but everybody who earns $1 keeps and spends more of it.
And now we hear from the Commerce Secretary today, Howard Lutnick, opening the doors of the federal government taking additional stakes in American defense contractors. What you mentioned at the beginning, who decides these contracts, that'll be interesting if that happens, don't you think?
It will be. Some of this will require Congress to act on it, and it's not something Congress has ever done. It's not something the United States has done before. There's some dangers there that things can become problematic because who do you buy the plane from? The company the government invested in, or the company that actually earned its own way that didn't need you to invest in them? Are you bailing yourself out when you give the contract to a government-owned film? That is the approach, unfortunately, that Argentina took for many years. So I'm not sure. We'll see what they're thinking. And of course, one of the things is Trump takes a lot of different approaches and says maybe to a lot of interesting ideas, and he has moved the ball forward so quickly, so rapidly on so many fronts. I don't want to second guess. I don't want to criticize something that if I don't understand what they're trying to get to. It is in other countries that's been tried and hasn't worked out. Let's take a look and see how the president's looking at doing something like that. I think he has really put us in a strong position to compete with the rest of the world. He recently was talking about going after more countries that have put excessive taxes on our high tech companies. The Europeans are very bad about it. Canada, he got them to stop it by threatening them with tariffs. The use of tariffs, I don't think tariffs are very good, they're taxes. But as a threat, as a negotiating tool, he has removed a lot of the damaging laws, taxes that other countries have on American products. And that we were not getting done any other way.
On there live with Grover Norquist, president of Americans for Tax Reform. The other big story, of course, President Trump announcing last night that he's firing the Federal Reserve Governor Lisa Cook because of allegations she committed mortgage fraud. Looks like she's filing a lawsuit now challenging her removal by President Trump. We're following these developments here. The president also signaling he has somebody he'd like to replace Lisa Cook already as Fed governor. What's your reaction to this unprecedented story?
Well, some politicians and some bureaucrats have done what she's alleged to have done. It's very problematic. It's not a mistake. You do this. Your accountant knows you're breaking the law. So it's a bigger problem than you made a mistake. This is deliberate. And I mean, there may be some story behind the story, but as explained, that seems to be cheating on your taxes. And particularly if you're supposed, you're looking at this sort of thing. This is exactly one of the challenges that you have. This is what somebody should avoid unless they thought that the Democrats were going to run things forever and they could do anything they wanted and no one would ever look.
All right. When you work for the Fed, you're supposed to have a good accountant, I guess. That's one other important point. Well, Grover, I wish we had more time, but thank you very much for that thorough assessment as always, and look forward to staying in touch with you on all this. Grover Norquist, president of Americans for Tax Reform, live with us here on Mottek On Money on 790 KABC.
Hey there. I'm Paula Pant, host of the Afford Anything podcast. I help people make the smartest money decisions possible because, let's face it, money's too important to wing it. From investing strategies to economic trends to savvy travel, lifestyle design, and beyond, we're in this journey to financial independence together. Remember, you can afford anything, just not everything. So, afford anything. Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KABC. Turning now to real estate. Summer starting sluggish for the housing market with persistently high mortgage rates, historically low inventory, and broader macroeconomic uncertainty weighing on both buyers and sellers. This according to Cotality, formerly known as CoreLogic, in their latest Cotality Case-Shiller Home Price Index, S&P Case-Shiller Home Price Index, which came out today, showing home price gains easing a bit. Let's bring in Jeff Lazerson now, the president of MortgageGrader.com, also Orange County Register real estate columnist. I know you track mortgage rates second by second, Jeff, so let's start with that. How are the rates looking here now?
The rates are looking pretty darn good, Frank. That's the nice thing. I think the word is just not out. The 30-year fixed is at 5.99%. That's for a well-qualified borrower, up to $806,500. The 15-year fix is at 5.125%, and then the high balance loan, that's 806,501 up to $1,209,750 in LA and Orange County. The 30 years at 6 3/8, the 15 years at 5 3/4%. Those are all with 1 point. Jumbo fix is at 6 1/8% at 1 point, and the government loans, FHA and VA, are 5.49% at 1 point cost. So the 10-year Treasury is looking good at 4.27%, and rates are starting to head down a little bit. So that's a positive for sure.
All right. So it looks like those rates that you just mentioned, that's pretty much at or near the low point this year, right?
Yeah. It hasn't been this low in, I don't know, it's like, I think I was looking at the Freddie Mac stuff about 10 months now. So it's looking really good for, rates are sliding down now. And even though people think the Fed rate drop is directly connected to mortgage rates, it's really not. And this stuff is already priced in, but it's looking really favorable because I think there really is an employment slowdown out there, and the markets are responding to it.
So the fixed rates are impacted by the yield in the 10-year note, which we mentioned quite a bit, but the adjustable rate, that's the one that that's pegged to the Fed funds rate, which the Federal Reserve, from what we hear, is going to be lowering maybe by a 1/4 percentage point next month. Does that make adjustables potentially more attractive starting next month?
Absolutely, yes. And even right now, the adjustables are looking good. You can get an adjustable, a 5-year ARM at 5.5% right now. I mean, it's not a ton lower than the fixed rate, but it is lower, and just takes a little bit more, and maybe you'll see it under 5%. And depending on how many cuts they do this year, I'm guessing that they're going to do a 1/4 point next month and maybe another 1/4 in November or December. So I think at least a 1/2 point remainder of the year, maybe even 3/4 of a point. So you could see that 5-year ARM under 5%. So that's a real positive too.
All right, turning to the other big story today, the home price index. It's now called the S&P Cotality Case-Shiller Index. Cotality, formerly CoreLogic, based here in Southern California. What's your reaction here to this report showing home price gains starting to ease now?
Yeah, that's exactly what we're seeing out there, the same thing that the totality report's showing. So the report said that basically year over year, we're seeing a 1.9% increase in prices, but that's nothing compared to the 6.5% increase we saw at the beginning of 24. And then if you account for inflation, prices are actually decreasing because inflation rate is 2.5, 2.7%, something like that. And so the prices are actually decreasing once you plug the inflation factor in, and it's the same old story. It's high rates, high insurance costs, high property taxes, and it's just an affordability nightmare. In fact, I was looking at some stats. The first-time buyers, they're paying $1 million to $1.3 million for a first-time buyer to purchase a home. Now, if it's condo, of course, you could get in for less, but people want homes. They don't want condos because all the condo fees are going through the roof. So $1 million to $1.3 million for a starter home in the greater LA, Orange County area. That is just rough.
Rough. A doghouse for $1 million, right?
Yeah, that's about it. I one fellow though that I took a loan application from him today. He ended up getting a good deal. He got a 4-bedroom for $1,070,000, and he said it's a little bit tired, needs some work, but he was surprised that he could find a 4-bedroom for that, because usually for $1 million-ish you're going to be looking at a 3-bedroom. So there's some stuff out there that people can find. You just got to look hard.
I'm looking at the this totality report now. It looks like home prices up only 0.08% in Los Angeles over the past year. That's quite remarkable. That's way down from the sizzling price gains we've seen in the past. And there's some negatives here. San Diego, down 0.61%, and San Francisco prices down nearly 2% over the past year. We're starting to see some negative year-over-year changes here. Jeff Lazar, are these any canaries in the coal mine here?
Well, I think that as rates drop, the affordability improves, and so I don't think that that's going to be like an anchor hitting the bottom of the ocean. I don't see that. As rates drop, more people will pick it up and go out and look for properties, and we're going to see that repetition of the story where lower rates means more buying power and people want to jump in. And so, if we see rates in the low to medium 5s, which there's a good chance I think that all this stuff is going to do reverse order and home prices are going to pick up again.
All right, terrific. Jeff Lazerson, president of MortgageGreater.com, also Orange County Registered Real Estate columnist. We'll be looking for your column this weekend, Jeff. Thank you very much for taking the call live with us here this afternoon.
Thanks for having me, Frank.
Thank you very much. And coming up next, stay tuned for the 790 KBC News Blitz with Randy Wang. I'll be back with more at 4 tomorrow afternoon. Big day tomorrow. NVIDIA earnings coming out after the closing bell. NVIDIA stock closed at nearly $2 today at $181 and change. Stay tuned, 790 KBC.
I am Michael Rosenbaum.
I am Tom Welling.
Welcome to Talkville,
where it's fun to talk about Smallville.
We're going to be talking to sometimes guest stars. Are you liking the direction Lois is going in?
Yeah, because I'm getting more screen time.
It's good. But mostly it's just me and Tom remembering.
I think we all feel like there was a scene missing here.
You got me, Tom.
Let's revisit it. Let's look at it. See what we remember.
I had never been around anything like that before. I mean, it was so fun.
Talkville.
I just had a flashback.
Follow and listen on your favorite platform.
Let's get into it.